Let's start here in the UK. Quick word on the Bank of England. Wages above inflation again, but does this alter your view on when a rate hike is coming?
No, I mean, it's obviously, as you mentioned, it's good news for David Cameron and George Osborne, and it's also good news, obviously, for everybody in the UK to see wages finally growing after probably 3 or 4 years of real sort of declining incomes. But no, I think the macro forces external to the UK are in the driving seat to some extent. Clearly, you know, the oil price is foremost amongst those, but you know, inflation isn't rearing its head for the moment. And to be fair, I think if anything, central bankers, particularly in Europe, would like to see some inflation. So no, I don't see rate rises on the cards. I think, you know, we're looking Q2, Q3 next year before the bank makes a move.
OK, so let's head across the water stateside. We're hearing from the Fed a little later today. We've been expecting a more hawkish tone, but with the currency crisis in Russia and skidding oil prices, are you expecting something a bit more cautious now?
No, I think I read a headline this morning. The Fed expected to look through the Russian crisis. Janet Yellen actually took over presidency of the Fed when we had last time we had you know, a problem in Russia and the Ukraine in February of this year. Well, sorry, late January, early February. She didn't. She wasn't. Minded to change course then. I don't expect the Fed to do anything about that now. One stat I saw last week was that these very popular inflation swaps were indicating that you know, out to 2019 inflation expectations were falling. So even an economy such as the US, which, you know, notionally is growing 3% per annum on a GDP basis, people aren't expecting inflation, and therefore I don't see any reason for rates to be tightened.
OK, so let's talk Russia, obviously very much in focus at the moment. Where do you think Russia goes from here, and how do you see the impact of what's going on in Russia on global markets?
Well, I mean, the impact on global markets will be significant, particularly throughout other emerging markets. And you know, those are the ones to watch most definitely. And I think perhaps in the, you know, between perhaps now and the new year or early into the new year, we could see liquidity squeezes and capital flight from some of those other markets. We saw Thailand, you know, have a wobble earlier in the week. Obviously, you know, we've got Greek elections today, which could presidential elections, which could cast the spotlight on there. Russia, really, I'm afraid, has probably missed the boat to some extent to control its problems.